Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Happy Friday, everybody. It is a beautiful, well, it's kind of dark right now, but it's going to be a beautiful day here in Seattle. 7 a.m. It is early in the day, so we are ready to rock. Today is going to be a good day because we have Nguyen with us from all the way over in Philly. Giang is a multifamily investor, and she is big on data. So we're going to talk about how data can inform your decision-making in real estate. I am super excited to jump into this. Giang, thank you very much for hopping on the show.
Thanks so much for having me, Gabe. And good morning. It's really early for you. So I'm glad we both got our coffee and tea and we're ready to rock talking real estate. I think it's a great way to start the day. So.
Yeah, exactly. Yeah. Don't worry. We got coffee. Our brains are on fire here.
Yep.
So I told you before we got on here, we like to start with stories. I'm sure you got a good one. Why don't you take us to the beginning of your story in real estate and tell us how you got started?
Awesome. Yeah. So my name is Giang. I grew up in Vietnam, actually. And I came over to the US for college. I actually went to school for biology. Okay. And so I went to school in Maine, really cold, really different from where I grew up. And after Maine, I moved to Philadelphia.
Was that a culture shock when you got there?
It was a culture shock. Yeah, it was culture shock, both in terms of learning everything in English.
And you didn't know English before you came over here?
I learned a little bit, but I learned everything in Vietnamese. So I was learning English, but I couldn't really, we don't, it's not our first language. So it was a culture shock to start now learning everything in English, not only learning new information, but new information in English. Yeah. Sure. And so that was actually would be very similar with my intro to real estate, because real estate is very different from back home. Compared to it is in the US. So I told you I went to school for biology. And so I knew nothing about real estate. I didn't even know mortgage existed. Really? I didn't know, because back home, we don't really have that mortgage. We don't really have the same investing principle. We don't have a lot of these things that we have here in the US.
So I'm always interested to learn kind of how it works in different countries. Do you know? And I don't want to derail you too far from
no worries.
But tell me a little bit about how it does work in Vietnam. There is
So back home, most people would just buy with cash.
Okay. So no loans.
And no loans. You may be able to get a loan, but it's very difficult, and it's not quite as. I think now it's a bit more popular, but most people are still buying with cash. Maybe it might lead to what we're talking about today. But I feel like data back home is a little bit of scarce. We don't have a lot of data. We don't have something like the MLS. We don't have something like an aggregate database like CoStar or like anything else we have here. So there's a lot of, I want to say, speculation.
Right.
So a lot of investing.
You're like going to people who know something. And
who knows something.
You just got to trust that they know what they're talking about.
Who may know something. Yeah. So there's a lot of speculation. So most of the time investing back home is probably one of those that is if you win, it's huge. But if you lose, it's also huge. So it's a lot more high risk, higher return. But it's very different from what investing here could be, which is a mix, right? If you want to go more conservative, you definitely have your option there to be more conservative. There's certain market you can be more conservative in. And then if you want high growth, there's certain speculative market that you also go in. So there is a bit more mix. Back home, I think it's a bit more just more speculative. And so just more risk overall. But nice. So it's very interesting.
The basic principles are the same. There's appreciation there, I'm assuming, and
there is appreciation. Yeah. There's actually a lot of appreciation, I think, because simply kind of like what we see here, sometimes appreciation is that speculation, right?
Yeah.
It just depends on what's going on out there in the market. So there's a lot more of that speculation. Tax is also very different. There's just many different principles. Both of my parents were teachers, so I didn't really grow up in the whole not rich and also not in an entrepreneurship investment environment. I wanted to become a doctor. I worked as a scientist for almost 10 years. And so the investing was kind of on the side. I just happened to buy a foreclosure that was 4 blocks from where I was renting at that time. So first investment out of the gate, we had no water, no HVAC, no electricity. We had foundation issue. We have sewer line issue. We have everything that could have gone wrong, went wrong. So it was a great crash course into construction, into real estate 101.
And was this in Philly?
This was in Philly. Yeah. There was 4 blocks where I was renting at a time. It was a lot of sweat equity. The property was actually vacant for over 20 years.
Jeez.
So that's why there was a lot of things that went wrong with it. There was actually this huge giant tree that was growing in the backyard that was growing over like 2-story tall and growing into foundation wall.
Yeah.
So first property out the gate, and we have like mix safe permit in order to before we can even rehab anything. So
jeez. It's funny when you hear like a property that's been sitting for 20 years in a big metro like Philly, because I'm always talking with other investors who are out there just like getting deals done, and I always think like, oh, there's no more deals left. And whenever I hear my brain say that, and you got to remember, like, there are so many houses out there. Some of them have been sitting for 20 years and nothing has happened.
And this was on market.
Oh wow.
Yeah. So this is actually the majority of my deals were on market. So this is very interesting. So if you're listening and you're like, well, there's no deal out there and there's a good deal on the market, definitely don't pass on that. There are a lot of good deals on the market. You just have to find that advantage, so to speak.
So when you bought this, so this was your first deal that you did. It was a foreclosure. Why did you buy a foreclosure? What, like, going back to your mindset back then, what made you want to buy this foreclosure?
Yeah, great question. At that point, as I mentioned, I didn't know anything about real estate. I didn't know mortgage exists. I didn't know hard money lenders. I didn't know anything. So at that point, I was working as a scientist for, by this point, like 3 or 4 years now. So I saved just enough capital. I saved about like 35, 40K in cash. And this property was like 30 something K. So I was like, well, I think that math makes sense.
Yeah, so in your mind, you're like, I gotta buy houses with cash. So it's
I gotta buy a house with cash. And so this is the only thing I could afford. So I'm like, okay, I think like that makes sense. It was 4 blocks from where I was living. So the math was mathing at that point. And so there was a lot of sweat equity. And so this property took about 1.5 to 2 years to actually fully rehab. I borrowed that property. So, after the rehab, I refinanced, actually live in it as a primary. And so then I was able to pull out a lot of cash to move on to the next projects.
Very cool. Very cool. You house hacked and you bird.
I house hacked and I bird. Yeah. And this is how much I didn't know about real estate. At that point, I was looking for contractor on Craigslist. I was looking for contractor I was looking for drywall person on Craigslist, and that was not a good idea. So
you never know what you're going to find on Craigslist.
You never know what you're going to find. So pro tips out there.
I will say I have hit gold in Craigslist before with, hires for my own team, contractors. I mean, sometimes there's really good things on Craigslist, but you got to watch out. I think
it's certainly, and I think this maybe tie back to what I was talking about with on market properties, right? There's always people that you can find that are good people you can work with. There's always deals that you can find. It's just a matter of exactly what you said, knowing what you're doing, knowing what to look out for, and then how to create your advantage in this field of competition out there, right?
Yep, absolutely. All right. So you got this first deal done. Your first deal, you got it successfully completed. You had some more money in your account. At what point did you start to think about multifamily?
Yeah. So great question. So at that point, as I was doing my first project, as I mentioned, since I didn't know anything, there was a lot of ask Google about how do I do this, right? And so that was when I came across Bigger Pocket, and that was when I start actually do more education, listening to podcasts just like this to really learn about what people are doing out there. And that was when I learned more about multifamily. Specifically at that point, it was just small like duplexes and just learn about the cash flow. That was when I learned about the concept of financial freedom, of what it looks like to buy something that has cash flow so that eventually it will replace your income. So I learned about, that concept, read Rich Dad, Poor Dad, a lot of that, similar to what people are doing now in real estate. So then my next few projects was actually duplex conversions. So what I talk about how buying my deals on market, right? These properties were listed on market as a single family, but I knew I wanted to do more multifamily. So my advantage here is actually buying in something that did not make sense as a single family, convert them into duplexes. And now the cash flow makes sense. And now these property makes sense for me to hold long term, that has cash flow, has some appreciation. And that's how I was making deals on the market work.
Yeah, that makes sense. And it's a really good strategy, something that not a lot of people think about when they get into real estate, but I feel like it's something that especially is good for the beginning investor, because you don't have a lot of capital, you don't know how to raise capital. And so you're going out there, you're buying properties, but almost every single family does not cash flow, especially in markets like, Seattle, down the coastline. You're rarely going to find a single family that cash flows. But if you can do something like what you're talking about, adding another unit, that completely changes the equation. So yeah, that's really smart. It's awesome that you hit onto it. At what point did you get into the larger multifamily, 5+?
Yeah, so I got in that 5+ space in 2021. Okay. So that was actually a solution to a pain point that I was having with duplexes, right? Exactly what you were saying, like, hey, most single family don't really cash flow, especially in expensive market like where you guys are at. So it may make sense if you can add in, an ADU or something that can help with the cash flow, right? So I was solving the cash flow problem. The issue at that point is the cash out problem. Okay. Is that with most, especially in Philadelphia, when we don't have that much appreciation, like maybe where you guys at with Seattle, is that not a lot of people would fix up nice duplexes, triplex, or quad, and then go ahead and sell on the market. So I was having problem with comps at that point. So we couldn't really find good comps in the market that like really give me able to get the cash out. Yeah. So I was having cash stuck in the properties because just simply nobody is selling, fix up nice duplexes. Yeah. So I solved the cash flow problem, but I have the pain point, which is the cash out. Because of that, I wasn't able to just keep reusing the cash and really execute that burst strategy. So that led me to the small multifamily space. Okay. And I love playing in this small multifamily space. A couple of reasons.
Small
go ahead.
means different things to different people.
Oh, so yeah. Sorry. Small,
like small for you.
5 to 20 unit space.
5 to 20. Okay.
Yeah. So I love the space for a couple of reasons. One, if you're new to, anything 5 and above, they are considered commercial multifamily. Because they are commercial multifamily, the value is based on the income. Now, I would say the caveat, which not a lot of people maybe talk about, is that when you're in that like 5 to maybe 10 unit space, the appraiser, yes, there is still a lot of income approach, meaning your value is based a lot on the income of the property. But because you're in that 5, still in that smaller space, they still take into account a little bit of the sales approach. Oh, so just keep that in mind. Yeah. So that's what I came into when I was doing a lot of this small space, is that it is still kind of balancing out both of that space.
Even if you increase the NOI, it doesn't necessarily mean that your value that the appraiser is going to give you, that a bank is going to look at, will will change
Yeah.
that much.
So that's what it is in my experience. So they still put heavier weight in the income approach, but they still take into account the sale approach. So don't just strictly go with the income approach.
And that's for 5 to 10.
And that's what my experience in a 5 to 10 unit space. So the reason why I like the space is that my value is now completely based on how much I can push the rent and how efficient I can make the expense, right? So now I solve this valuation problem because I'm no longer my valuation no longer depends on how the guys or the gal down the street sells their property. So because of that, I was able to go into a market, find a lot of 5 to 10 unit space, really push the rent, push the rent, and be able to do complete cash out while still having cash flow. The other nice thing about this space, though, is also that it's a bit larger so that a lot of beginners investors aren't going in it, but it's too small that not a lot of experienced investors are going into it. So you're kind of in a sweet spot when you don't have that much competition compared to the 2 to 4 unit size or compared to the 20 to, 300 unit size, so to speak.
Yep. Yeah, absolutely. And even I would say 50 to 50 plus is where the bigger people go. So 5 to 20 does seem like a pretty good sweet spot. When you're the one downside to smaller properties, and even a 10 unit it'll still kick off some good cash flow, but the one problem is a lot of people find the management of smaller properties a lot more difficult because you can't have full-time staff on site. Have you found that same problem, or what? And if you have, what have you done to kind of mitigate that issue?
Yeah, great point. So I will say that I do not manage my own properties, which is where I also find this like 5 to 20 units kind of like the sweet spot, because it's still small enough that I think just having normal property management company who used to manage 2 to 4 unit space, they can easily manage 5 to 20 unit space. We have a 42 unit, and I think that's kind of getting into now kind of more of that pain point that you're talking about, where it's large enough that there's enough headaches that is really hard for property management company to like take care of, but still too small to have someone on site. So I still feel like that like 20 to above is when things start enough headaches accumulation, but not enough things to support staff. So that's what it has in my experience. So in terms of finding property management company there, I would say definitely ask from other people for recommendation. I think property management company is the one thing, like, I know some people like hold on to their contractors, but property management company is typically the one who like, I'm happily share. So I typically would just ask other people for that recommendation. And then definitely go on to other like competitors, like other apartment buildings, see who's managed them, sees how they're doing, and then reach out to those property management company. Those have typically been my approach to finding good property management in a new area.
Yeah. And that's funny that you said that. It's 100% true. People will never share their contractors, but they'll always share their property managers. So
yeah. And then you can ask. And then you can ask your property management company for contractors.
There you go.
So then, ask. Smart. That's typically the easier one to ask.
Awesome. Well, hey, we have been just crushing the time here. We're almost through our main point, and we haven't even talked about the main thing that we were going to talk about is how to use data to inform your decision making. So I'm just going to go ahead and prompt that question.
Yeah.
Data is so important in real estate. It is the thing that we make decisions on, especially when you're buying. So tell us, there's a lot of different ways to use data. What are the ways that are not commonly used that you feel like a lot of investors should start implementing in their own investing strategy?
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, thank you so much for bringing that up. I know we've been chatting just about everything. So I love numbers. So I would say if you have issues with anything in your business at all, it will all come down to numbers. Yep. So the issue there on often where beginners, investors get into trouble is which number, right, to track. So this is where it's very specific, and you probably heard of this key performance indicator, KPI, right? Identify what is that number one thing. And my process has always been, okay, as a scientist, I always love this like research, this experimental side of things, right? Yep. So if you're here and you're like, hey, I just don't know what to track, I feel like paralyzed, pick 5 numbers that you're most likely you think are the important numbers. And a lot of these numbers. Yeah, great question. So for example, if you are on acquisition, right? If you don't have deals out there, there's a lot of numbers that you can track, right? How many brokers you're talking to, how many deals you analyze, how many deals you make an offer on, how many LOI you sent out there. What's the difference between your LOI numbers and the actual winning numbers, right? Now, there's a lot of these numbers. So the question is, what really moved the needles? So the example in this case is your offers, right? You can underwrite 10 property, but if you have 0 offers, that is not directly actually leading you to what you want, which is having a property under contract. So that would kind of be how I'm like, hey, here's all the numbers that you can track. What are something that directly tie you to the result that you want? So if you have trouble with acquisition, what you really want to track is how many offers you are submitting. Yep. If you are doing asset management, right, you want to track your NOI. That's ultimately affect your cash flow. So you can track your income, you can track your expense, but ultimately the NOI is that key that you want to track. So those are kind of 2 examples. So wherever you're at in your whole investing business, if you have issues, go back to the numbers, go back to what are you tracking and what are some of those important keys that you should be tracking to move your business forward.
Yep, absolutely. Couldn't have said it better myself. And with the KPI, we always like to look at conversion rates. And so if you're tracking offers, just try to get that conversion rate lower. Offer to accepted offer yep. to closed deal. Yeah, I love it.
I love it.
I'm going to take that opportunity and move us into the quick question round. Are you ready?
Okay.
All right. It starts with education. It could be any form, could be books, could be movies, could be whatever. Just give me 2 recommendations, one for general life wisdom and then one for real estate.
Okay. I would say generalized wisdom. I would say The Gap and the Gain as a book.
Say that again. It was
The Gap and the Gain.
Oh, okay. The Gap and the Gain. Yeah. Okay.
Yeah. So love that book. If you're at any stage during your real estate or anything at all, entrepreneurship, read that book. I think that really helps, especially for a lot of us who are overachiever, who are really focusing on where we're going instead of like keep focusing on that gap versus of how far we have come. I love that book overall. So that will be my number 1 for just overall
wisdom.
And wisdom. Yeah. My second recommendation for in terms of real estate specific, if you're interested in, I would say probably meetup groups. Depends on where you're at. I would say those are probably my number 1 real estate advice. Go out to meetup group, whether it's Zoom, whether it's in person. That's really where you get exposed to what people in your market are doing, get recommendation, really just get your ideas flowing about what people are doing. Love those. So that would be my recommendation there.
Yeah, that's a good recommendation. Not many people say that. And I'll even go to meetup groups because I just hate like spending a couple hours at a place. And so I'll just go and talk to people at the beginning and then I'll leave when they do the presentation because I don't want to sit through that. And even that, just being able to communicate with people who are doing the same thing, understanding where they're at, it's a really good benefit. So Good
Love it.
call out. I'm going to move us on to the next question, and this is about the U.S. It's a big place, a lot of opportunity. Give me the single metro you're most excited about investing in today.
Metro wise,
City, yeah.
city wise, I would say currently I'm in Cincinnati.
Cincy, okay.
Yeah.
And I'm sure you got data behind that to justify that decision. Why do you like Cincy?
Yeah. I like Cincy for a couple of reasons. I think it's a really good mix of cash flow and appreciation.
Okay.
I think it has been having, just like a lot of Midwest market, it has been having tremendous rent growth. But the good thing about Cincinnati is also the affordability factor. So you might have rent growth in another market where they are pricing people out. So even though there's rent growth, there's only so much you can push. In Cincinnati, I think there is still a lot of affordability factors there. So you can actually still push rent. I like that the city is also very business friendly. It is really pushing a lot of infrastructure growth, a lot of business friendly just programs. So I personally like Cincinnati.
Perfect. All right. That leads us to the next question. This is about finding deals. It all starts with getting in contact with the seller and writing up that purchase agreement. So, what is your favorite way to generate leads and find new deals?
I think it's going to depend on what size you're at. On the larger multifamily size, so on that like 50 plus to whatever 1,000 units, brokers is probably still your best bet. The key there is focus on the brokers that have the most transactions in the past year. So this is where the data come back in again. From a lot of site CoStar, you can probably pull the list of brokers that have done a lot of transaction in the last 365 days. And then I would prioritize reaching out to them. And then you'll find that there are a couple of 4 or 5 brokers that have the majority of the market share. So that is on the larger side. On the smaller side, there's still brokers, a lot of brokers recommendation connection, but you can probably get more success with off market, reaching out to owners. You can still find a lot of mom and pop in this space. So I would say actually off market would probably be a good approach for that smaller size.
There you go. All right. Next question is about lessons learned. Not every deal goes the way that we expect it. A lot of times a wrench is thrown into the mix. But that is when we get to learn our biggest lessons. We get to take it to the next deal. So what was a deal that went a little sideways for you? And then what was the lesson you pulled from it?
Yeah, I love this. The deal that went sideways for me was I was in the multifamily space for a while. And then there was a single family that came on that was 14,000. And I was like,
wow, that's a deal.
Cheap, right? Like, why wouldn't anyone buy this? Like, it's so cheap. So I'm like, yeah, let's buy it. How wrong can it go, right? It went really wrong. Like, it just went completely sideways. This 14K, because it's essentially half a multifamily, the other half is completely torn down. It's in an area that is in an appreciation area, but in a block that is not appreciating. So this is a couple of key questions here, a couple of key lessons here. One, just because it's cheap doesn't mean it's a good fit for you.
100%.
So it could have been a great deal for someone, but I was not in a single family space. I was not in a fix and flip space. I was in a cash flow multifamily space. So this deal did not at all meet any of my criteria. I simply bought it because it was cheap.
Yeah.
And so that was complete. I did not, I did not use any of my advantage. I did not use my cash flow. I did not use any of those criteria that I typically very good at. So that deal was completely, not good. The second lesson here is that in a lot of cities, it's very block by block specific. It's very block dependent. So whether you're flipping, whether you're renting, whichever that is very important to get some good boots on the ground, specific to your property management company who really know like, hey, this block is actually not a good block at all. So those are the 2 key lessons that I take away from that. Focus, stay in your lane, do what you're good at, and to really have that local knowledge to really to be successful in real estate investing.
Yep. Yeah, I've learned those two lessons myself. And it's a difficult lesson to learn, but it's so important. I
It's so
especially,
important.
well, both of them, don't chase low numbers, even if it seems good. It's a low number for a reason. Just,
Yep.
just don't chase them. And then the second, block by block, cities are so diverse. And even if it's a
Mm-hmm.
good city, it doesn't necessarily mean that it's a good specific location, a good block that
Mm-hmm.
you're buying in. And this is
Mm-hmm.
applies to single family. I'm talking a deal that I did that was a self storage facility.
Oh, interesting.
It really it can go wrong if you buy in the
Mm-hmm.
wrong area. So definitely look out for that. Um,
Yep.
Great, good advice, good lessons. Both of us learned, and we took it on to our
Yeah.
next deals.
Yep.
That brings us to the very last question. This is for the listeners. I'm sure people want to reach out, get in contact with you. It's a two-parter. How can they find you? And then what can they expect when they reach out?
Sure. I am on Instagram at that salsa investor. One thing I haven't mentioned is I am a competitive salsa dancer.
Oh, that's cool.
Yeah, so actually that's what I spend a lot of my time on now. I quit my W-2 about a year and a half ago to transition fully into multifamily.
And salsa
But
dancing.
yes, and salsa dancing and
There you go.
becoming a professional dancer. So yeah, you can find me there on Instagram at that salsa investor. You can reach out to me at Giang at One River Capital. I am always happy to chat multifamily, whether it's passive or active investing, any real estate overall. So you can find me on Instagram or reach out and you can find me dancing, talking about real estate or travel and eating good food. So yeah.
Perfect. I love it. And Yang is spelled Giang. And then
Yes.
that's at onerivercapital.com. I'll put that link in the show notes. So if y'all want to reach out, just click a little more in the description. It'll pull down that full description, and there you can find Yang's links.
Love it.
All right. That wraps it up. Thank you very much for hopping on the show.
Thank you so much for having me, Gabe. Great chatting with you.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at the realestateinvestingclub.com. If you want to support the show, just give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.